Hey, 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 hey. What's up, guys? Another red day. Man, how many red weeks are you guys going to handle before you finally start buying? Oh, my goodness. This is getting crazy. I started the week early this time. Usually I wait until Mondays, but then over the weekend, things started getting crazy in the futures markets. My Sunday evening is when the futures open, Forex markets start trading, commodity markets start trading. And wow, oh wow, there was it lived up to expectations. Oh my goodness. It's of course we all saw crypto was selling off pretty hard over the weekend. The stock market started to signal a big drop. Sure enough, at the open, triggered the circuit breakers. Oil hitting big time lows, the yield curve hitting all-time lows in the US, commodity markets in turmoil, stocks. It's crazy. It is crazy. Should we start to panic? You know, that's the big question. Is it buy time or is it holy cow, this is going to get worse time? And, you know, we're going to look at that from a trading perspective, but also I'm going to share my thoughts on just the broader economy, what this could potentially be signaling if things get worse. I did some stock trading today, of course, as I did every day, every morning, and did pretty good. Actually, all of my stock trades, there was maybe a scalp to the downside, but all of my stock trades this morning were to the long side. Mostly traded Apple, mostly traded Zoom. Zoom was a very good trade, up about, what is that, $10 almost on this trade here. So very nice little move after the pullback. So just kind of taking some bounce trades, but that's about it. Just looking for short-term bounce to the upside and just getting out of the way, because in the big picture, it's too early to tell if it's over yet. Certainly in the near term, when markets hit peak panic and it's on the news and the VIX is at all-time highs or near historic highs, generally speaking, it's good to kind of take the contrarian point of view, but that's a short-term point of view. Longer term, it's way too early, and in fact, it could be bad news for the broader economy, and I don't believe the ramifications of the coronavirus and the impact that it's going to have in the broader economy have been fully felt just yet. And we've been saying that for a while here. They were not priced in, and just, you know, the markets finally woke up and said, whoops, and it was kind of the big spook. And we're seeing a little bit of bounce right now, though, so it's been good. Now, Zoom is I've been trading a couple of what I would quote coronavirus plays. Zoom is one of them, because this is, if you're not familiar with Zoom, it's kind of the video conferencing type of stock. It's been a good trading stock anyway since it's IPO'd, but you know, in recent days, whenever things get crazy, this one actually looks like a good alternative, because if companies have to start doing more remote work and remote conferencing and all that stuff, companies like Zoom are going to benefit from a lot of that. But, you know, all in all, it's been a crazy week. Gold is probably the only thing that held its own during this whole sell-off. I mean, commodity prices, even gold stocks got smacked. So it's just kind of where's the port in the storm right now. Cash seems to be it. And we saw crypto take a massive hit to the downside here. And, you know, so there was some discussion on the Slack group talking about, is Bitcoin going to be a safe haven play? And generally speaking, I was saying no, just because, at least not in the near term, right? And that's just been my experience with these type of assets when there is a global, Zoom is ZM, when there's just a global, what do you call it? A global scare. You see a rush to cash, and anything that's considered high beta, like Bitcoin, does take a hit. You know, it takes a hit, and the mic's on, and that's what you get to see. You know, you see the quick liquidity. Everything usually loses to the downside initially, and then it's kind of what recovers quickly. Now, I think longer term, Bitcoin certainly will outperform when the recovery happens, and it has some fundamental things going for it, supply, demand, all that good stuff. So we'll get into some of that. Hit the like, ladies and gentlemen. You guys need some chips for this dip. Oh man, yeah, this is pretty wild stuff. So what I'm gonna do here, let's look at the broader economy first. I'm gonna look at the stock market, the oil market. Holy moly, some of those oil stocks are just getting smashed. And no disrespect to my conservative trading buddies, but I've got friends who they will hold oil and buy oil stocks because of the dividend. And I've always argued that dividend doesn't mean squat if the underlying asset is dropping so fast. And you look at things like Chevron and Exxon Mobil and some of those things, and sheesh, I would never trade a dividend for us holding a stock that's done that, right? I mean, granted, on a percentage basis, it's not that big, but if you look at the bigger picture on the weekly basis, I mean, it's been a dead stock for the last 2 or 3 years. In light of a record-breaking stock market, everything's going up, and of course, oil gets smashed. That's getting hit. Look at things like Exxon Mobil, getting smacked down, coming, in a raging bull market. Here is Exxon Mobil just taking a hit, going down from the 90s, now here trading in the 40s. Yeah, you get a dividend, but at what price, And it's just different flavors for everybody, but and it's the same thing with crypto when people were talking about, staking and you can get a dividend and blah, blah, blah. And it's like, it makes no sense for such a volatile asset. Like, why would you even consider locking up your crypto for 0.01% or 5% when the asset moves that and sometimes in a day, in an hour? Like, it just makes no sense. But to each his own. I'm a little bit more, aggressive in terms of the shorter term. So we're seeing the SPY right now. This is the S&P 500 index here in the U.S. Gap down today, hit the circuit breakers, bouncing pretty nicely here, which is kind of what I was looking for a little bit of bounce action here. How high does it bounce at this point is anyone's guess, but you're seeing a pretty good little bounce here. Now I'm thinking we maybe close the gap, maybe not fully. I mean, that'd be a pretty massive gap to close if it did. That'd be very bullish in the near term. I think we'd see some pretty good bounce action in the next week or two, but right now, I'm just treating it as short-term spike play, and that was really it. So Zoom, Apple were some of the names that I was trading just because they've held their own pretty good, just trading the little bounce here. But that's really it. Not a whole lot other than that. There's some what I would call Corona stocks, Gilead and Moderna and some of those other ones. But all in all, no safe place, no port in the storm. This is crazy. Robinhood. Robinhood is down again. Now let me go on a little rant on Robinhood. And if you're not familiar with what that is, it's basically a stock trading, quote unquote, trading platform. It's more of a stock investing platform where they don't have costs and all that good stuff. And it has a market. It certainly has a purpose, right? It was meant for individuals who can't open a trading account that you typically would on a professional trading platform because of the capital requirements. You got to have 25K minimum and all that stuff. And so this was a nice alternative to being able to buy stocks and at low fees and all that stuff, even options. But what's happened, especially with the recent bull markets, is people have literally turned it into a day trading platform. And let me be crystal clear. Robinhood is not a day trading platform. You can treat it like it, but when it comes to liquidity and slippage and all that, please don't, guys. I mean, yeah, you're not paying trading fees, but you're losing other places, believe me. I don't know any professional traders, none, that use Robinhood as their platform. I mean, if you're going to be a serious trader, you got to use much better tools because you're going to get burned on stuff like that. And look at what's happening here. It's like it's been down twice here in the last month, and it's just, feel bad for some folks, but it's not a trading platform. I mean, people treat it as such. You can invest with it, but just be careful, guys. It's there's a lot of risk to some of these names here. But that's it for that. Looking at oil real quick. Let's go to some of these before we start talking the crypto markets, Bitcoin, the collapse. But looking at oil, if we go to the oil futures here, there was a big event that happened. It started last week. And for those of you not, most of you guys have probably heard of OPEC. And so, the big oil producers, excluding the U.S., but you've got Russia, Saudi Arabia, Iraq, the Venezuela, and all the big oil players, right, formed this oil cartel, if you will, and they were disagreeing on supply. And oil had already been getting hit, right? So we're already aware that oil had already been kind of lagging here this year. And then once Corona hit, prices really started to come down, and that was just signaling a potential forecast that the global economy was going to slow down. Airlines would travel would slow down, cruise ships would slow down, cargo, all those oil users would start to slow down, and this started to drive prices lower. But what ultimately happened is it was an economic game. Saudi Arabia and Russia couldn't agree to price. Russia wanted to keep pumping up supplies because a lot of these economies they depend on high oil prices. So it's really bad for them when oil prices come down. But the U.S. now being one of the largest oil producers in the world, if not the largest, we used to import a lot of oil. We're not. We're basically net neutral here for quite some time, ever since the oil shale and the gas and all that stuff, and oil in Texas and fracking. But the U.S. doesn't really import, but it still impacts the oil producers here locally now because we're such a big player in the oil market. But Russia wanted to keep supplies up. Saudi Arabia couldn't agree. So long story short, they walked away from the deal. So there was no deal, and that essentially caused the overnight collapse in oil prices, which spooked the global economy because oil plays such a big role in global economy and commodities, and it just started to trigger all kinds of other things. And that was largely what caused this stock market crash here this morning. And so pretty interesting times. It's coming at the worst time when you think about it, right? And Saudi Arabia can afford to do this because they're the lowest producer in the world. I think their cost to produce a barrel of oil is like $7 or something. So they can ride it out for a long time and really squeeze the pain on some of the other players who can't produce at quite such a low price. So pretty wild stuff, man. And this is just a small glimpse of the bigger picture of what's going on across the world. Longer, over the last 6 months, there's already been this repo market crisis, which has been, for whatever reason, grossly underreported. It's a huge deal, and I think we're starting to see some of the ramifications of that play out. And the Fed has just been pumping money into the repo markets for quite some time, and nobody's really said anything about it. But here it is starting to really kind of rear its ugly head. And so you got a lot of things going on. You've got the coronas shutting down economies, and it's just too early to tell how bad it's going to get before it's all over. Near term, I think we do see a little bit of a balance, because typically when you see kind of that peak panic, there's drastic measures taken and there's a little bit of a balance action here. But after that, I'm not so sure. I'm not so sure that the impact has been fully priced in. Now, there's an old saying that the stock market is a forward pricing mechanism, meaning the models that are used to price out stocks largely reflect future earnings as well as future cost of capital. And if those big institutions that hold large quantities of stock are thinking, oh, the fundamental picture just changed, future earnings are going to drop, then that reprices stocks, right? That's the theory, modern portfolio theory there. And so if you do that, then you start to say, well, then the stock market forecasts potential pullbacks in the global economy. And most of the time that's true. And what tends to be the number is if the S&P 500 drops below 20%, then the probability, the likelihood of a recession increases drastically, something like 60%. And so we are at that point here in terms of the S&P 500, in terms of bear market mode. Not quite there yet, but it's getting really close. And if you look at where it was here at the peak, the recent all-time high, man, it's been a drastic and fast pullback, basically down about 19% since the all-time highs here, and very quickly, just crazy trading, 15 trading days, essentially 3 weeks, almost a month's worth of trading here, basically brings prices all the way back to early 2019. Just completely erasing this entire move up. Just amazing to see that. And so here it is at that 20% mark. This is where things start to change, because you've got a lot of models and there's a lot of algos, and even long-term holders, the big institutions, you will use the 20% number as kind of their benchmark, and they'll start to make decisions based on that. So today's low was a very important low in my opinion. If it starts to take that out, things start to look a little hazy, and the likelihood of a recession certainly starts to increase big time. And it wouldn't surprise me if we see one anyway, just because of the shock that the market has taken, the economy has taken with the slowdown of Corona, airlines, cruise lines, conferences all over the place being canceled, hotels losing bookings, all that stuff. Even if this passes in 2 or 3 weeks and it's kind of, we're turning the corner and things start getting back to normal, the shock of that's going to still kind of reverberate, and there'll be a couple of quarters of just lost productivity, lost income, and that's just not going to be recoverable. So it wouldn't surprise me to see a little bit of a slowdown in the markets, in the economy anyway. But gold has been on a move here, still pushing higher. I'm still thinking 1800 is the big target for me on the gold markets. Getting pretty close to that here. We're kind of in this next zone here that we saw that last peak back in 2012. And so it's basically right back at that. 1800 is going to be a big number to be watching if it continues to spike into that. The US dollar index has been collapsing here as of late, just getting smackarooed. If you look at the Dixie here, now again, this is near term. This is just the last 2 weeks, but that's a big move in 2 weeks. If you look at just the number of what do you call it, the pip movements versus the JPY, right? If you look at something like that versus the euro, the US dollar has been getting smacked here, just a big deal, and that's what's partly driving the gold market as well, right? It's a kind of the anti-dollar. But Bitcoin, let's go. Bitcoin has not proven to be the anti-dollar, and in fact has been a little bit of a leading indicator in a lot of ways in terms of what this market has done lately. Bitcoin peaked here mid-February and has just kind of been pullback mode, and then the crash mode here in the last couple of days with volume starting to spike here. Typically those volume spikes at the lows start to signal a little bit of capitulation, some panic selling, and those are the cues that I start to look for to start scaling in. But look at this volume here the last 2 days. It may be hard to see here on that screen, but man, oh man, that volume has just really increased here over the last couple of days here as this market collapsed. Now, I pretty much took the weekend off, so I missed out on a really nice short trading this weekend. Generally, man, I would have been trading something like this. That would have been such a nice trade, and I missed it. I was just pretty much flat. And you guys caught my last live stream talking about, we've hit the targets. I pretty much started to scale out, and I was just waiting. My thought process was, if it continues higher, there's a little bit of a range on the upside, but if it drops here, I was looking for either a higher low on the daily chart or a retest of these lows here to make a little double bottom. That would have been the best case scenario. And if not, so then you're talking 8K and 8,200 and just slicing right through all those downside targets. So no end in sight here, but it is extremely oversold. Oversold to the downside here in the near term on the 4-hour charts, finally hitting oversold levels on that daily chart, but not extreme yet, so it could keep going. Just a wild move to the downside, but the volume is certainly starting to spike here at these levels, so it would not surprise me to see a little bit of a short squeeze, a little bit of a pop to the upside. There is absolutely blood on the streets, as that saying goes. Just a crazy move, and yeah, I mean, I'm kind of bummed that I missed this move, but I'm glad that I was just kind of out of the way anyway for the most part. But my thought process was, I kept thinking we'd see a little bit of a spike or pullback, and I was thinking I'd short it down to like maybe here or here, and I was mostly looking at ETH and some of the other names to short. I thought we'd hit 220s again, and I had my short trades open, but then I closed them out going into the weekend because it wasn't really doing much. It was kind of sitting tight, and what I was wondering what would happen, I was thinking we'd see a spike down and then a quick pop up, and I thought, I don't want to get caught in the chop. I don't want my short to get filled and then get raked to the upside. And so I closed it out. I thought if it breaks, I'll look at it, and I just didn't put my orders in. The one I was looking at the most was the bear flag bounce in Litecoin, and man, I missed a good trade there because that played out almost perfectly here. And so if you go to the daily chart here, there was a lot of these bear flag bounces, right? You had this big drop last week and a half ago, and then most of last week was just kind of this very anemic bounce right into these moving averages, and they were ripe for a potential break lower. And again, I thought we'd see a break lower, but maybe retest these lows. but that would have been a great trade here. And I just totally missed that. I was looking at this lower trend line thinking I'm gonna take that trade if it breaks the trend, and failed to put my orders in. It was a nice weekend, no doubt, but would have been a good trading weekend. But for now I'm looking at the long side again. I'm looking at potential bounce trades here in this very oversold conditions that we're seeing across the board. So let's deep dive Bitcoin. What are some levels to be watching here? Now, the notion of the big inverse head and shoulder pattern, it is looking a bit iffy is a good way to say it. After this route to the downside, there was some levels that I really wanted to see hold if this was going to look much stronger. I wanted to see a shallow right shoulder, right? And so the levels I've been watching here, let me re-put this on the chart for us here. We were looking at this last leg up, right? Basically, there was this little inverse head and shoulder on the daily chart. I was using the start of that right shoulder here as the impulse move that started this big rally up to about 10.5. And the level I really wanted to see hold was the 618. I wanted to see that 8200 range hold, and it just sliced right through that. It just keeps dropping. I don't have it on here. Let me put the 786 number. I don't typically use that just because at that point it's very deep of a pullback, and it's usually not very bullish if it pulls back that far. But price is basically right at that 786 retracement. But again, that's a less bullish pullback. When it hits the 618 and bounces is great. When it pulls all the way back to that level, it's not quite as positive. But if you look at this horizontal price support, this is basically right at that last line in the sand. The literally must hold level if the bulls are going to salvage this move in any way. That's literally the last line in the sand. You don't want to see a break of 718 or the 786. At that point, it's done. I mean, this is no longer considered a retracement. That's considered a full retrace, a full give back at that point, right? It's no longer pullback mode. It's just the trend is turned clearly. And so that's where we're at right now. This prior breakout point here around that 7,800 that led to this big run up, it's pretty much come all the way back down to that point. Volume is spiking. This is probably not a bad place to start paying attention for those reversal signs. If you're into the knife catching, then this is where you try to knife catch, because below here, I mean, it's kind of game over for a little bit on the weekly charts if it does break. And this is what I mean by that. Let me go to the weekly chart. I'm going to take some of this stuff off, right? This is kind of the line in the sand that we want to see hold. But let's zoom out here and look at this big symmetrical pattern that's kind of been playing out here, leading right into the halving, right? We can do something like this here. And, I'm going to keep this lower trend line a bit tighter here. And basically, I'm going to use this low down here. And let's tighten that up a little bit here. Basically, the December low and then today. And if we do that, I mean, this lines up interestingly with this horizontal price support. And so, yeah, I mean, if the bulls are going to start to show some life, this is where you want to see them come in and bounce some price here a little bit, because below this break of this trend line, I don't see the recent December lows holding. That's just me. If it cracks here, then we're retesting 6K and maybe a little bit lower, and that's absolutely possible in the event of a global economic financial panic. Because that's just what I've seen in the past, where even these quote-unquote safe haven assets get dumped when there's a liquidity crisis and people just want to raise cash and just looking at protecting themselves versus gaining and getting a return, right? At that point, it's more of a safety thing, and something as volatile as Bitcoin is not a safety play. Let's just be real. And so that's the reality. Now, longer term, I'm still bullish on Bitcoin, and that could be a fantastic buying opportunity. But we've seen in the past, I mean, Bitcoin can surprise both ways, upside and downside. So this is kind of an interesting point here. 7,800, 7,700, is this going to hold? Is this going to be the level that turns to be the bounce? Or is it like breaking down here, 6K on the way? What do you guys think? I know there's a lot of blood in the streets. There's a lot of panic. But, man, is this the time to sell? Is this the time to buy? And those are my thoughts on this pattern here. So the inverse head and shoulder, yeah, maybe still in play. It's looking a lot more iffy now. I really wanted to see that 8K hold. If we see a big daily reversal here, a big spike to the upside, bullish engulfing candle, that would be great. I'd love to see something like that here near term. And that would kind of show some conviction in the buyers here, saying this is a good line to start defending. But we haven't seen that yet. I mean, so far, if you go back to that 4-hour chart, it's literally just been lower lows. These lows, they spike a little bit, but it's just lower lows, lower lows, lower lows. Now, volume is spiking here, which is encouraging, because when you see volume spike near the lows, that tends to signal a little bit of capitulation, a little bit of panic near term. Maybe we start to see the downside starting to slow down here a little bit, and some flattening out at least. So I'm thinking we get a little bit of a bounce. I'm starting to scale in. I started to buy yesterday, started to buy too early. I was looking at that 8K break, and I thought I'm going to start taking some here, and I'm going to add a little bit more. But again, knife catching, bloody finger time. So, not for everybody unless you're willing to babysit the charts and start paying attention here, because things are dicey here. When things are this, in this environment, when things are in panic mode, there's no rational levels, right? Things can remain oversold for a long time. Just because something is oversold on the RSI, absolutely, it could stay down there for a while as price continues to drop. So, that's just something to keep in mind. Things do remain oversold, but if you're willing to take a shot, typically you're better off buying after a massive 20-30% drop than after a massive 30% rise, right? I mean, if you're looking at it from that perspective, would you rather buy at the top of a move, or potentially what could be the lower end of a move? And so we've seen this big drop, and again, this is the key level, the 786 fib level. It's kind of your max zone. This horizontal price point, this lower trend line, the bulls really don't want to see this level crack. Otherwise, it might not be too pretty. So definitely something to make note of here. Somebody pointed out this inverse head and shoulder on the lower time frames. And yeah, that's absolutely in play. I would certainly be mindful of that. If you're watching kind of this bigger pattern playing out, this projects down to the 6Ks, the 5Ks. Is that possible in this environment? I think so. I mean, just because, again, you could see a panic and everything gets dumped. We broke right below that support line, so it's just a matter of how low does it go. Now, am I personally playing it? I'm not thinking we get that low here, but I'm certainly watching it. It's definitely worth making note of, but I'm kind of looking at the higher time frames at this point, daily, weekly charts, and looking at these and saying, all right, is this the place to start looking at it some more here? So what other names are you guys watching here? We're going to go to some of the altcoins, because that's the next big question is, do the alts start to rally and lead the way up, or is this kind of, we got more ways to go? I've noticed the what do you call it, the Bitcoin dominance hasn't really quite popped as much, which is interesting considering the big break. I was wondering, I was expecting for the Bitcoin dominance to really spike on a dump and hit my 67-68% target. It's gone up a little bit, but it hasn't been that big spike, which tells me that on a BTC pair, a lot of the big cap alts are kind of holding their own versus Bitcoin. Now, on the USD side, yeah, everything's bludgeoned. I mean, there's no doubt about that. But from a BTC pair perspective, it's interesting to see that the alts are kind of holding their own here a little bit. So something I'm going to be watching here for those early signs of reversals. Do the alts start to lead the way back up? And so I'm going to be looking at that here. So let's look at a few names here. If you're just joining us, we're talking about the first half of this: oil markets, gold markets, stock markets, some of the volatility, recession probabilities, long-term ramifications, COVID-19. And then we talked Bitcoin. We haven't looked at any specific names, so you haven't missed any of those yet if you're just wondering. Before I get all that out of the way here, some other thoughts on the broader economy. Somebody was posting, do we start going to the food bank? Is it ramen time? And I don't know about you guys. I'm sure you've already seen this, but it started about a week and a half ago. And there was this slow trickle of kind of panic buying at the supermarkets and Costco. And man, oh man, this weekend, it's literally been in full force here. You go to like your local Walgreens. I wasn't standing in line, and there was some couple came in, and they went right to the register where I was at, and they said, I want to buy some hand sanitizer. Where's your hand sanitizer? And they said, oh, go to those people over there at the other register. And they went over there and they said, no, we're all out. We don't have any. So they left. And all the supermarkets are out. You look at isopropyl alcohol, it's out. You look at toilet paper, it's out. Clorox wipes, bleach, selling out. I went to my local sporting goods store this weekend, and you swear people were stocking up for the zombie apocalypse. I mean, they were buying bullets by the caseload. They were buying those camping meals, those freeze-dried camping meals were completely sold out. The shelves were empty. The water purification tablets were empty. Things were sold out, and it was just crazy. And I was going, man, like people are in full panic mode here and just buying everything they can get their hands on. And I get it. You know, there might be some mandatory quarantines and lockdowns, and you know, you might have to stay indoors for a couple of days, and I get all that. But wow, like you would think we were preparing for the hurricane / zombie apocalypse. So it's pretty wild just to kind of see the environment out there, and just a lot of the stores are kind of empty. I went to the gym, and typically, you know, it was a lot more full than it normally is, you know, and it was pretty quiet for a weekend. I was like, oh, nobody wants to go to the gym, and people are kind of wondering what's going on. So there you have it. Buy if you haven't already, start buying your rations. If you can find them. Man, I'm gonna just start selling my rations at this point. Gonna fetch a pretty penny. But there you go. Somebody asked here on the live stream about a week and a half ago, saying, "Hey, if I had what was it, $500 or something, $300, do I buy a crossbow or do I buy some Bitcoin?" And I said, hands down, crossbow. See, that was the right call. Your Bitcoin's dropped quite a bit here, and I said, you know, the reason is, okay, like if things get crazy, like, okay, is $300 worth of Bitcoin, even if it doubles or triples, is that going to mean more than having a crossbow, right? Heck yeah, you got to have a crossbow if you don't have anything else, right? So, but yeah, just pretty wild stuff there, going crazy right now. But the preppers are having their day in the sun here. They're finally right. And you know, one thing about that I want to rant on, and then we'll get to the charts, I promise. But one thing I want to rant on, I used to trade the gold and the silver markets quite a bit back in the day, pre the last financial crisis. And it was crazy because gold, yeah, it's a good insurance policy, right? It was like, oh, in the event of an inflationary economic collapse, you want to have some gold. And I understood the rationale behind it. I totally get it. But people were starting to do that with Bitcoin here lately, and you almost had the sense that they were gold and Bitcoiners, that they were almost hoping for the economic collapse because they wanted to be proven right. And I would constantly tell the guys in the gold forums, like, guys, trust me, you don't want to be right. Like, it's good to be prudent and sure, have some insurance, but you don't want to be right. Believe me, if there's an inflationary collapse, like, okay, you might have a little bit of gold to preserve you, but you'll have way bigger things to worry about than what's your portfolio look like. And that's, you know, it's just crazy when people are almost hoping for it because they want to be proven right. And it's like, okay, that's silly. It's like buying insurance and hoping that you need it. Like, nobody does that, right? Insurance is one of those things that I hope I wasted money on, right? I buy healthcare insurance and home insurance and car insurance and whatever insurance because I hope it's money wasted that I don't actually ever need, right? I'm never actually hoping that I get to cash in on my disability, right? Like, that's just crazy. And it's almost, you know, people were looking at gold and saying, aha, I'm going to be proven right. I'm going to have gold when the economy collapses. Like, I don't want the economy to collapse. I want things to be looking good here. So anyway, that's my rant. Looking at BTC here, let's dial it in because you're getting some volume spikes here. And this is an important support level. I'm thinking we get a bounce here. I'm looking for it. Like I said, I started to scale in a little bit yesterday around that 8K number. I woke up this morning and said, okay, more red. I'm going to take a little bit more here. But I'm also looking at some of the alts because I'm thinking some of those alts that just got smacked have been potentially oversold here in the near term. Might be some good bounce targets here. So one thing I'm looking for here, let's go to some of the big cap names here first. I'm going to start with ETH, BTC, and then ETH USD here. So looking at the BTC side here, this is the hourly charts, but let me zoom into the daily chart real quick to show you guys what I'm looking at here. Versus Bitcoin, it's actually held out okay, but it's at a key support level. Is this the level that finally holds again, or does it crack? If it does crack, there's not a lot of support on the way down, so it's kind of in no man's land till about sub 2300 or so. But I'm watching this one because it's had some good relative strength versus Bitcoin. Of course, on the USD side, you know, smacked hard like everything else. But versus Bitcoin, this is what I'm watching here for a potential bounce. And so I'm liking ETH over Bitcoin here at the moment. If Bitcoin bounces, I'm thinking some of these big cap names show some outperformance in the near term. So this is what I'm looking at. ETH is probably one of the top picks right now for me. Looking at ETH on the upside, maybe we get a little double bottom action here. If it cracks back over here on the 1 hours, then things start to look really good on the ETH BTC pair. Now, ETH USD, looking at that perspective here, is there a divergence here? Let's go look at that. I'm going to the hourlies here just because things are moving so fast. You got to zoom it in here a little bit. $200 ETH hitting that 190 mark. One thing to note here, some slight divergence. Again, it's just a potential signal. It's not the signal, but it's certainly worth noting here. Volume spiking on that last hourly candle to the downside. Potential bullish divergence. So again, I'm liking ETH as a potential bounce target here on the market. If things bounce, I'm going to be looking at some of the alts instead. I do have some BTC, but I'm thinking some alts are going to be where I'm going to start scaling in here. So looking at ETH, looking at what were some, I'm just going to go down the big cap names first, and then we'll get to any specific names you guys want to watch here. So looking at XRP Bitcoin, pretty good little relative strength here in the last few hours. I mean, it got smacked yesterday. There was this big wick, but again, it's been holding up versus Bitcoin here, just kind of going flat. Had the big shakeout yesterday trying to bounce. If it can get over some of this near-term resistance, then I think you get a pretty good bounce on the XRP BTC pair. Longer term, again, this chart's not pretty. I mean, longer term, I'm not that bullish on it. In fact, it's been one of the laggards. There's been way better alts to be watching than XRP. You know, things like Link and Tezos and even ETH. But near term, I'm thinking might hit a little bit of a good bounce here. Looking at it from the USD side, there's XRP, I mean, just hitting some pretty wild oversold levels here on the hourlies, getting smacked, but again, starting to see a little bit of divergence here, trying to form a low. You get these wicks that are spiking down. Hasn't confirmed yet, though. Nothing's confirmed yet. Everything's still trading below even the short-term 1 hour charts, moving averages, but they're starting to test here again. So just like most of these other names, if they start to get over some very near-term resistance, then I think you can kind of see a quick snap back, a little bit of a bounce, maybe some short covering, that sort of thing. And then after that, right, it's going to be just let's wait and see, because typically moves like this don't play out overnight. I mean, they don't just end in one day and then it's like off to the races. I mean, there tends to be some choppy action near the bottoms when you get moves like this. So, but definitely names I'm keeping an eye on here. What else? EOS. I'm just kind of going down the big cap names here, but seeing a little bit of bounce action here in the last day and a half or so. Look at these big wicks to the downside, retesting them here, trying to bounce. This one's a much wider and loose, so definitely a little bit tougher, but could be seeing a little bit of double bottom, but you won't get a confirmation until you get back up over this level. EOS USD. Not quite there. Getting back over that 310 or so would look much more positive, would start to clear the 1 hour moving averages. But man, these guys have been smack-a-rude. Most everything looks this way now, right back to this breakout point. Just totally retested it straight up, straight back down, and it's been a tough one. I mean, this one has given you several bear flags, right? You got a bounce there, and then a smack down, then another bounce, then a smack down. And look at where those bounces landed on the daily charts for all of these, Bitcoin, for EOS, some of these other ones. I mean, right to the daily 1022 EMAs, almost perfectly every time, and then that's where they roll over. So just those are levels in the lines in the sand that continue to hold, and when they line up with prior support levels like they did right here, even more important, right? Because it's not only a moving average, which is a derivative of price, but it's also a true horizontal price support level, which is much more important. And you're seeing those bounces play right into those levels. Bitcoin did the same thing, some of these other ones. So interesting to see that happen. But now we're right at these support levels. Do we get a little bit of a bounce here? Definitely one thing I'm watching out for here. Let me go to, what am I seeing here? I'm just keeping an eye on the stock market here on the side. All right, so what else here? I'm going to just keep marching down the big cap names here. Litecoin USD again. Man, what a nice short trade that would have been, and missed that over the weekend. But, you know, not looking to short at this point anymore. I'd just be watching for some potential signs of a low, looking for some bounce trades, or just wait it out and then short on a reload of a bear flag or something. But again, volume really starting to spike here. The bullish divergence is not quite as prevalent on Litecoin as it is on, say, you know, EOS or ETH or something. So this one's just still showing much more weakness than some of these other names. And on a percentage basis, it was down more than many of the other names here. So Litecoin really got hit pretty hard. But on the BTC pair, it broke this support I was watching. Big spike here in the last hour on the volume as it forms a reversal candle here. So in the near term, I think a lot of these names are due for a little bit of a bounce. How high does that bounce go is anyone's guess. But, you know, like all things, typically the way I approach it on the bounce trade, I'll look at the first kind of support target that broke to the downside, and that's my first upside target. So, you know, looking at these, what were those prior levels that cracked? And that's where you start looking for those bounces to fade into, you know, because people start to scale out. Maybe they were buying the dip and they're breaking even now, and that's just the way it plays out. And then if it keeps going at that point, then yeah, you can start looking at, okay, maybe maybe it's over, but it's way too early to sell at this point. This is just kind of oversold crazy levels to the downside. So Litecoin, BNB, oh, CZ started tweeting right around 9K, and the rocket memes, and Bitcoin's not going to be here much longer, and he cursed it again. He jinxed it once again. Oh man, I love when CZ starts tweeting. I'm going, oh crap, there he goes again. And sure enough, it didn't last very long. Lasted about a day, and then it just cracked to the downside. I'm not saying he crashed it, but it's just always hilarious to watch him tweet over bullishness right when things are at the top. But BNB, looking at it from the BTC pair, again, just like all these other names, right back at the lows, testing support again. Looking at it from the USD side, which is what I like to trade BNB a little bit more from. Just ugly, man, oh man. But looking at these again, you're going to see a little bit of a theme here, but you are starting to see some signs of reversals potentially trying to form. Not saying we've seen them yet, but trying to form. And again, the clues that I'm watching are the RSI, MACD divergence, the volume spiking here. But look at the moving averages. It's still very much trending lower. Bounces right into those. So until you start getting back over at least the 1 hour moving average pairs, it's not over yet, right? You got to start turning the corner first. And right now we have not. But I'm watching the volume spike in. I'm thinking things are getting panic mode. Just looking at Twitter and the stock market. I was listening to the talking heads on TV this morning. And, you know, for the last 2 weeks, all of them have been saying, oh, this is fine. I'm buying this dip. I'm doing that. And then now they're all going, well, how bad could this get? This is getting really worried. And is there a recession coming? And now the talking heads are getting worried. So I'm thinking, okay, maybe we're getting close finally. But at least for the near term. Just the near term here. All right, let me see here. Sorry, I'm taking a swig of some coffee. Let me catch up here on some of these comments, which are coming hot and heavy here. And I'm going to start seeing if we can get a list of names going here that you guys want to look at. Chainlink, let's absolutely talk Link. Let's talk XR. We looked at XRP. We'll look at XLM. We'll look at ICX. What else here? WKX. Can't be too bad. The Twinkies haven't sold out yet. That's true. Oh, man. else here? Supply shock. Oh. Sorry, hold on. Just kind of catching up here. One. Greetings from Russia. H bar. Yeah, let's look at that. Tezos. Okay. And then we'll come back to the BTC here. I'll kind of do the big picture view and some deep dive again. I know some of the folks are joining a little bit late here, but man, oh man. What's your action plan in case of a recession? You know, so a recession doesn't scare me. A financial scare like 2008 does, right? And there's different versions of recession. Typical recessions, like 6 to 9 months. Most people can survive that. It's not that big of a deal. But if things get really bad and, you know, '08 style, then yeah, things get really bad and you got to be able to ride it out for a year or two. And so having cash on hand is certainly good, because one thing I learned during the last financial scare, and no doubt it was a doozy, right? I mean, no one's expecting that again, hopefully. But one thing I learned was prices can't get too low. People thought, oh, it can't get any lower than this. It can't get any lower than this. And there were some companies that just went to insanely low levels on the stock price, gold. I mean, a lot of things just dropped. Oil was down into the 20s after hitting over $100 a barrel. So yeah, there's the surprise to the downside is crazy. And typically you kind of get the V bottom when it finally bottoms out. You get the big shape and then it slows down and then it's kind of off from there. But you just got to be caution, you know. But you know, as a trader though, I mean, I hate to say this, but as a trader, you can make way more money faster on a drop than you can going upwards, which is why I'm personally a fan of shorting, because the moves that you guys have seen, the moves to the downside are fast and furious. And yeah, even if you miss a little bit of the upside, if you catch one of those drops to the downside, it more than makes up for the missed upside move. So that's why, you know, from a trading perspective, you know, from an economic perspective, yeah, I don't want to see a move like that. Nobody wants to see that, just because that starts to impact people's livelihoods and jobs and the broader economy, and that's just no fun. But from a trading perspective, honestly, I don't really care which way or the other. Volatility is a trader's best friend. The worst thing for a trader is when the market is just boring and flat. And I've seen those periods, and trust me, those are, ugh. Like, you don't even want to come to work some days and trade and do anything because you're just like, this is boring. But so you do want some volatility as a trader. And if you know how to do it, upside, downside, doesn't really matter, to be honest. In fact, I like to trade short. I'm a pretty good bear trader, just because, like I said, you can catch those quick moves down very fast, but to a limit, right? I don't want it to go to nothing. Look at that link. All right, let's take a look at link here. Link is showing a pretty decent bounce. It has shown some really good relative strength versus Bitcoin here, and just continues to be one of the market leaders here near term versus Bitcoin, again, holding its own and trying to bounce back. It's not very far away from hitting new highs here. If we go to the daily charts, just continues to rally here, holding the moving average. Even yesterday during the big pullback, basically went to the 22 EMA and just continues to look pretty good. So definitely one to be watching here. Again, just has been the stronger of the names right now in terms of the bigger cap names. So one of the few. I haven't looked at this real quick before we get into that. Let me go to and look at the bot status. The Bitcoin, the node bot has been short since 226. The 4-hour strategy has been a little choppy, but that daily strategy has proven to be pretty good here. And look at this. Everything red, 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 red. The only one that's not red, again, is Link. And that's the only trading bot that's long at the moment versus Bitcoin. Everything else is either flat or short. So just Link is the only one that is showing long on that trading bot. So both the 4-hour and the daily, which is pretty wild. So even after the route, still long. Anything else that's flat here? Let me filter on this real quick. Let me filter on the daily status, because that one moves a little slower. ETH, Tezos are flat. They're not short. Everything else, the bot's been short. How long has it been short here? It's been, oh wow, been short for some time. So like Litecoin, it's been short since February 26. This one since the weekend, so not that big of a deal. 221. Wow, XRP. It's been short since 221. This one over the weekend. That's expected. Yesterday, blah. Yesterday. So there's been some longer shorts there. 224 for XLM. So you can see where the weak links have been here. But it's been a long link since 227. So has been one of the stalwarts there. So holding up pretty well. Let's go look at ETH again. For those of you that missed it, I think this is one to be watching here versus Bitcoin. Again, showing some pretty good relative strength, but it's right at support. This is where you want to see this bad boy start to bounce here a little bit. I'm thinking we do, though. I'm thinking we do. Tezos, XTZ. Man, oh man. I caught a little mini bounce trade last week on that bad boy. Right to the targets and right back down. So I'm looking at it potentially as a support play again. Watching this one here. Testing support here. Below moving averages. So way too early to tell if it's going to turn the corner. But again, on the 1 hour chart, seeing some signs of, hey, this one's trying to get going. But again, lower lows, lower highs continues to be the thing. On Tezos, I'm looking at it more from the USD side is how I'm liking to trade this one. Look at the volume spike here in this last hour. Formed a bullish hammer reversal candle on that spike low. Confirming in the current hourly candle. Still 24 minutes left to go. But got to see it get back above these moving average pairs. Starting to do that will help turn the corner. Look for those higher lows start forming on a pullback. But the volume spike is significant. That typically, especially at the lows, pay attention to volume at the highs and at the lows after a long run, right? People too often will just kind of pick an arbitrary point in the chart when it's going sideways, but volume is your best friend when it's at the extremes, when things are crazy overbought, crazy oversold. When you start to see those big volume spikes, those are either signs of distributions on the upside or they're potential capitulations, at least near term, on the downside. And it doesn't always work, but there's things to pay attention to because then you start to say, okay, maybe that's it for now. The buyers start stepping back in. The last of the sellers have been washed out, that sort of thing, right? So that's what I'm looking for there. So Tezos, interesting. All right. ICX, Icon. How's our friend Icon doing here? I'll go to the daily chart on this guy here. Actually, considering the carnage here the last couple of days, held up okay versus Bitcoin. Still holding that support. It bounced, remember, last week, right back to the pullback zone. So could be an interesting level to be watching. And, you can almost say this is a little, it'd be a stretch, but it's a little head and shoulder type of signature, right? You had this first low, a little bit of deeper low, and potentially a higher low forming here with a very clear resistance level. I mean, that's pretty clear that these prior lows back here, wick here, wick here, wick here. So it's still range bound until it breaks out of that, but it is trying to hold up. So Icon versus BTC there. Now, if you look at it from the USD side, anything from the USD side right now is going to just look horrid. But this one's actually, it's breaking below moving averages. It's right at support again. So, and a lot of these are right at support, and you don't want to see these fail. Otherwise, there's not a lot of room below that because it was such a quick move up. So you want to see that bad boy hold right there. H-bar was one of the better names here recently. Even with the carnage again, held up versus Bitcoin, not even at the 10 EMA on the daily yet. So just really good relative strength. Very choppy here recently, of course, considering the market, but holding up. And we covered this one last week. This was one of the potential moves to be watching for a bounce trade, and that bounce trade played out pretty nicely here. So good if you caught that one there. What else here? What was the other name you guys wanted? WXRX. Still going. Again, this was a nice one we were looking at. Breaking out over highs. That was last week's live stream. It was pulling right back below resistance, and sure enough, had that breakout and boom, off. Now this one, however, it's all-time highs, so typically, you can't look left anymore and start saying, oh, there's next resistance levels, because now it's more of a price action thing at this point. But just keep an eye on that. It is starting to show some signs of divergence here in the most recent rallies higher, a little double top-ish, so I'd be watching out for that. But it is going sideways, so that's helping it. If it can continue to hold the moving averages, that's really the key. It's been riding that moving average most of this way up, so that's your first line in the sand to be watching. And look for those big spikes. If you see big volume at the highs and then it quickly reverses back down, that starts to signal some signs of distribution. Let's see what else is showing up here. So other than that, man, everything just ugly. XRP, we looked at XRP. Trending, look at the oversold alerts really spiking right now, just getting smacked. Let me go to that Raven, Quantum, Cardano. Okay, oh, one. All right. I'm making the list here. Before I do that, let me see what else is on the list here. I'm going to take off the oversolds because we already know that's spiking. Any power pivots right now? Anything? Sheesh, nothing. Just the true USD. DAI, VID. Oh man, the ETH bear. What else? Bitcoin. Link is probably the only one that I'd be interested in here. ETH bear. H bar. Kava. Oof, not a whole lot. Not a whole lot this week. Kava BTC holding some pretty good relative strength, actually. All things considered. I mean, it's finding a little bit of a low here. We'll see if we can crack above this resistance. This is an interesting level to be watching right here, because if it gets going, then your next target is that line in the sand right there. So, interesting. Okay, Raven. Raven's not looking pretty. I mean, it's been choppy, ugly, still testing this support, but it's just tough. It's ugly. Sorry, it's just ugly. But there's just no semblance of any pattern here. You get the big spikes, they completely sell off. Lower spike completely sells off. It's right at support. It wouldn't take a whole lot to crack this guy and make new lows, but at the same time, you know, looking at this support, it's been holding so far. But man, I'd want to see until at least maybe take out this, what is that, 320 level. That starts to form a little bit of a double bottom near term on the daily. Then maybe you can talk about retesting the highs, but right now, yeah, that's a tough one, man. That's not pretty. Quantum, Neo, everything getting smackarood. You know, Quantum broke from that bear flag, but it wasn't as bad as some of these other names considering. And let me see here. Yeah. Like a lot of these, I mean, there's probably better ones than others, but like a lot of these, I think they're hitting some near-term oversold levels, and I'd be watching more of the upside, at least on the lower time frames, right? Do they start to take out some of these moving averages? Are they holding up? This one's holding up pretty good, making a higher low. Some of the other ones are still making lower lows, and this one's holding up pretty good here. How's it look from the USD side, though? Yeah, I mean, you got the same pattern, right? You got the bullish divergence, still below moving averages. The volume hasn't quite spiked as much as some of the others. I like the ones that are, the volume here in the last 2 hours has really spiked. Those look more interesting to me than some of these other ones. So things like, you know, ETH, for example, right? Where you're getting the big volume spike. Again, it's not an automatic go all in, but it's definitely something to start paying attention to as a potential level to be watching. Let's go back to BTC here while we take a break on the alts. Yeah, even Bitcoin's seen a little bit of a spike on the volume. Not crazy, but you know, you've had two here in the last day. You had this big spike down here as it cracked below that that 7,900. You got another spike here on this volume, so we'll see. But it's still below these moving averages. Again, I'm thinking we get a bounce. There's potential slowdown here. The RSI is starting to rally a little bit, but after the bounce, then what, right? And how high could it bounce? First target, I mean, it's going to be the levels that were supposed to hold on the way down that didn't. So 8,200 is the first target, and then, you know, mid 8Ks at that point. The big target on the way up, if it continues to rally, is this zone right here, and that's basically 85 to around 86, right? And it's crazy to think that we're talking now that's resistance when it wasn't that long ago. Everybody was hoping that was support, and so that cracked. So any bounces, near term at least, that's going to be where you want to see them start to crack back over if things are going to look better in the longer term. But for now, I'm thinking we get a little bounce, but we'll see. Choppy woppy, Stock market's pulling back here a little bit. It needs to make a higher low here to keep this pattern going, but yeesh. Eesh. All right. Let me see here. Toilet paper to the moon. Toilet paper is a real Bitcoin. Just remember, guys, you can't eat toilet paper. Water and food. If you're going to stack up, like, screw toilet paper. Just go buy some newspapers. If you're going to stack up on something, like, get some food and water first, not toilet paper. Come on. Toilet paper is a luxury. Use some leaves. All right, you're distracting me. You're distracting me. Could BTC go any lower? Absolutely. I mean, you can make vodka out of toilet paper. Gross. Could Bitcoin go lower? It could. I mean, there's certainly. I mean, look at the daily RSI, right? The daily RSI, yeah, it's at 30, but it's not at what we would consider extreme oversold levels. And so, yeah, you can have that big spike down, and daily RSI starts hitting those teens again. And so, personally, I think it's oversold near term. Absolutely. Bigger picture, I mean, there's, like I said, it's way too early to tell. There's no confirmation of a low being put in or anything like that. It's going to just take time. It's going to take some choppy action here at the lows, a higher low, and then we'll get going. But you're talking daily charts. And so you're talking at least a week's worth of trading action, maybe longer, before we start to see a decent low being established. Near term, then yeah, I think we're at some key support. Like, this is the line in the sand, this prior breakout point. Personally, I already think it's gone down too deep. I was really hoping to see that 618 retracement hold, but it could still hold here and resume itself, kind of recover a little bit. But even then, I mean, look at the daily chart, right? A bounce, even a strong bounce to the daily 10 EMA, which again would put it at the prior support, 8,500. The daily 10 EMA would catch up from there. Would only take it to the moving average at that point, right? So that would only be, I mean, that's a strong bounce percentage-wise. That's a nearly 10% move off the lows, 11%. And even then, you're only at the moving average on the daily, which is crazy to think about. That's how fast this move has been to the downside. But we've seen it before where people say, that's the low, it's too low, and then it just keeps going. That's just the nature of crypto. It certainly has its surprises to the downside, but I'm inclined to take some shots here. Not some vodka shots. I'm talking shots at the trading. Who's inclined to take some shots here? It's only Monday. Who cares? Oh, man. Let me see here. Matic. Yeah, no, I haven't looked at Matic yet. Let's go look at Matic. Someone was asking about the fib tool. Let me go over that here next, because if you're having trouble finding the fib tool, I will show you where it's at. So on the left side here, you've got a couple of menu items here. But if you go to the third one down, maybe it's the third one, it might be different on yours, but you got these little lines. It gives you a whole bunch of different tools: pitchforks, GAN boxes, GAN fans, all kinds of stuff, most of which I don't even use. Fib circles, fib time zones, all that stuff. But there's fib retracement here. The only two that I use from this list are the fib retracement and the fib extensions. Most everything else, I mean, it's cool that they have all that stuff. I just don't use it. Martini, there you go. A little bit more sophisticated than doing shots. I like martinis. Martini, you can go with the martini. All right, let's go Matic. So looking at Matic here, right? Matic's interesting here. It's Matic again. Big picture, Matic's just been going flat anyway. Finally started to show some life last week, giving it all back. The fact that this is not really a longer term uptrend, right? This is just kind of a bounce from being dead for so long. I'd be more cautious on this guy. It hasn't particularly been a leader per se in the market lately, so I'd be cautious on this. But it is pulling right back to the prior breakout point here, right back to the 22 EMA on the daily. And so if you like Matic, then this is where you want to see it hold. But I'm just not too inclined to be long Matic. I think there's just better looking charts out there. But again, this is where you want to see it hold. If it bounces, it's gonna need to hold this level right now. You're already drunk. All right. Buy corn on the cob. Oh my God. I love the comments. All right, let's keep going here. I'm digressing here. Cardano cracking some support here, continues to break lower. This is Cardano BTC again. Hasn't shown quite the relative strength, right? And look, here's a good comparison, right? Just to show you what I mean by relative strength. This is Cardano versus Bitcoin. You line that up to something like, let me do the same time frame here, 4-hour chart. You do that something like ETH versus Bitcoin, you know, and while they're both tanking here, but you know, Cardano, this is daily, sorry. You know, ETH has held up a little bit better, Link even better, right? So you want to look at what are those names that have held up better versus Bitcoin, versus trying to catch bottom feed the weaklings, right? Just when the market's in turmoil, other than oversold bounces on the USD pairs, I'm not too inclined to bottom catch the weaklings, not just yet, at least. They have a new wallet update. Speaking of weaklings, how's IOTA doing? Is IOTA back? Sheesh, IOTA. Let me take that other chart off for you guys. Good Lord, IOTA just continues to drop. Look at that Eiffel Tower. My oh my. My oh my. Took them about 3 years. Oh man. Sad state for some of these projects. Look at that. Decentraland. Bounce right to support, little double bottom, rallied right to resistance, pulling back. You see the same pattern on the BTC pair. And I mean, it's about as simple as it gets if you're trading, just using support and resistance, right, for some of this trading. Pulling back, double bottom, rallied right to resistance, pulling right back. It's crazy. So we did some Tezos. Tezos is another one that's been showing some good relative strength versus Bitcoin, but it has made a lower high now on the BTC pair on the daily chart. So definitely worth watching here. It's looking like could be a lower low in play here. One I'm watching because it's right at support, but the fact that it's made this lower high, rallied, made a lower high right here, definitely worth watching, because below here, below this current support, there's really not a lot. I mean, it's a little bit of a gap. So at that point, you're just kind of in no man's land. Maybe you use some fib levels as pullback targets. Let me see here. You're barely at the 50%. So maybe you go 618 or even 786 if you're really looking for a pullback. If you do it from here, same thing. So yeah, if you get a lower low, I'd be looking at the 618 as kind of your next target. 2470. Okay, my friends, let me see here. I'm going to do a couple more and we'll go look at Bitcoin and wrap it up. What a day. What a week. It's all, I mean, man, it started yesterday. It's like, it's only Monday and I already feel exhausted. Plus, you know, the daylight savings time threw things off because now the stock market opens an hour earlier for me. So now I got to wake up an hour earlier. But, you know, there's one. So looking at this one, again, this is a tough one here. Looking at it from the USD side, maybe a little double bottom there, or from the BTC pair, excuse me. But the broader daily chart certainly it has been a laggard. I mean, this one's definitely not one of the leaders. I mean, just look at the broader trend, making new lows. Had some brief rallies along the way, but they're just very short-lived. So this is a tough one. And again, a lot of these have had such short history that they're all just making new lows. There's no support levels to be watching anymore. You know, you look at things like FATs. I mean, just basically hitting new lows. You know, a lot of them are, you know, just waiting for the reversal at this point. I'm not too inclined to knife catch some of these smaller cap names. The bigger caps are a little bit different. I do knife catch those from time to time. The smaller ones, see, a little bit more risky. There's less liquidity. It's tougher to get in and out of them with any meaningful size. ETC here. So looking at the Ethereum Classic again. This one, I think the trade's been played out. It had that nice run. It's just kind of been stair-stepping its way down. Let me clear that line here. If you look at, you know, the rallies right to the moving averages, they've all failed so far, just kind of making new lower lows. But in the near term, like a lot of these names, they're trying to find a little bit of a bottom here. Some volume starting to come in. If you start to get over some of these levels for ETH, that'd be $7. Then I think, or ETC, excuse me, that'd be $7. Then I think maybe you get a little bit of a spike higher here, but that's probably it. So my approach this week, at least for now, it's going to be looking for that oversold bounce, maybe trading a little bit to the upside here, and then just kind of waiting it out, seeing how it plays out from there, because again, it's too early to tell if that's the low, if the carnage is over, or if there's even more downside, and it's absolutely possible that we can get more downside. Don't underestimate, the velocity that you could see in an environment like this, where there's just kind of a lot of panic, a lot of people saying, I don't care, I'm not going to live through another 2018 style route, just get me out of the way now. You could absolutely see that. So just be cautious out there. Take it slower. If you're knife catching, maybe take it a little bit smaller. Don't go all in at the bottom. Don't try to be the hero. Don't try to pick the exact low, because if you're wrong, then it hurts a lot more. So just gotta take it a little bit slower, a little bit easier, or do nothing and just wait this one out. Stay off of Twitter. Don't read all the bad news. Stay off of CNN and CNBC and all these crazy guys, and just go for a hike. Go do something nice. Or dollar cost average. If you're a long-term holder, then yeah, dollar cost averaging absolutely makes sense, right? If you're thinking more long-term, if you're thinking trading, it's a little bit tougher. Go to Costco, buy some water. Okay, I joke about that, but maybe we shouldn't joke, because what if it does turn out to be serious? All right, so let's see what else here. I'm going to go back to BTC here, and then we'll wrap this bad boy up, my friends. But looking at this one, on the bounce, if we start to get some upside targets, or upside action here, then there's a couple of ways I'm going to be watching this. Of course, the daily candles themselves matter. So if you look at this morning's high / yesterday's close, right, that's usually a level to be watching, but I'm not expecting that to be much of a resistance. If it rallies past that, the moving average is what I'm going to be paying attention to. Eventually these two will meet, and that lines up pretty good with some prior support right in this zone. So at this point, that puts it around 8,400 to maybe 8,550, and that'd be my first upside target. Above that, just like last week, the 22 EMA is the next target, and then we'll go from there. So the fact that volume is really starting to spike here, the lower time frames are showing some divergence, is a little encouraging. I guess, can we even say that word right now? Encouraging, near term, that maybe we see a bounce, but after that, then it's kind of wait and see mode. So again, just going to take it easy. I am going to take some trades here, but I'm not going to try to be the hero, and I'm just going to watch this one play out. And if it looks like the bleeding, if it goes sideways, so here's the alternative, right? If it just starts to go sideways here, chop around, and there's no bounce, but there is a low, I'll probably get out of the way. So if it starts to do one of these, I'll probably just get out of the way, because what tends to happen is all that's doing is resetting some of the technicals from being crazy oversold, and then moving averages start to catch up on the higher time frames, and then it sets up for another leg down. So if it does that, then I'm just getting out of the way. So yeah, once it hits the upside targets, do I sell? Yeah, I do. On the trading side, I start to scale out. I sell most of it at my target, T1, T2. I'll sell a little bit, maybe a third of it at T1, almost all of it at T2. Sometimes I'll hold some. It depends on the bounce. If there's a lot of volume coming in, I'll hold it longer. But if it's lower volume on the way up, then I usually just get out of the way. I don't plan on getting out at the exact top. It hits my targets, I'm good. I wait it out. And then if it goes way past it and pulls back and makes a higher low, then I may reload at that point and start to kind of play a different strategy. But yes, short answer is, at least for now, the market has rewarded just kind of booking the gains at the targets and waiting it out. And so far, that's proven to be the case. If you look at Bitcoin here, last week, the upside target was the 10 and the 22 EMA, 9K and 9,200. And we pretty much hit those almost on the money, right? Here's 9K. The first day we bounced right to that. Then it kind of went sideways, tested patience. And then 9,200 was the level that it couldn't crack over the weekend. By that point, I was already out of my altcoin trades to the upside. I was out of Tezos, out of ETH, and looking at those. But BTC finally cracked, and yeah, just couldn't regain the target. And when it cracked, I finally started to get out of the way, right? This lower trend line was the level to be watching. It lost that level, lost the 10 EMA on the daily. At that point, it was like, okay, get out of the way. Now, I missed the short. Unfortunately, that would have been a nice short. But the upside targets, I mean, it made sense to get out of the way there. And I was holding some at 9,200. I still held some BTC, and I was thinking at most we might see this 9,500 if it cracks higher. But again, it wasn't the bulk of my trading position at that point. I had already booked most of the gains, but now we'll kind of wait and see how this one plays out. Maybe we get a bounce. I'm hoping we get a bounce. All right. I think that's going to be it for today. I know I probably missed some of the names out there. I didn't catch every symbol. I was trying to keep up on the comments while I was talking and blabbering, but take it easy, guys. I know it's the sentiment out there is a little bit scary, a little bit worrisome. So just kind of take it easy and try not to live on social media because it can get very stressful and overwhelming, and just sometimes you just got to get a break from that. And that's pretty much what I did this weekend. I was online for a little while and I started reading things, and it was like, man, I've only been online for 15 minutes and it's the end of the world and it's this and that, and I'm like, all right, I'm out of here. But all right, that's it's another roller coaster week, no doubt, is ahead of us. It's been the environment the last couple of weeks. But if you're trading and you can react and stay nimble to the volatility is good as a trader, but you got to keep your disciplines. Just remember the disciplines. If you're wrong, you're wrong. Get out of the way. Take a small loss. No big deal. Don't overtrade. That's the biggest mistake people make. Don't overtrade. Sometimes it's best to just kind of take a break and take it easy. But all right, we'll see how the week plays out. I will be back most likely Wednesday, and we'll go from there. Thanks, everyone. Take it easy.